Good morning, everyone. Welcome back to Morning Markets on Thursday, the 7th of May. Relatively quiet 24 hours in asset markets, which, given where we were only 5 weeks ago, seems like a strange thing to say, but that's the case, and that's what we've seen. The only notable thing, I think, looking across the various different asset markets was the continued pressure on spreads in some of the Eurozone countries, where we've seen yields continue to move out, primarily Italy and a number of the other countries that are more indebted and thence require more support from the Eurozone. But as we've discussed on these videos in the recent past, that's very much challenged by the political backdrop and indeed the ruling from the German Constitutional Court that we discussed yesterday. Turning to other things that we discussed this morning, two things I think from China which are interesting. The first of which was an improvement in their export data, 3.5% year-on-year growth in April. Digging into that a little bit, it does look as if that has been to their neighbours in Asia. That's not surprising, given that Asia is further through the COVID-19 impact and is starting to return from lockdown, so some improvement in activity there. My concern there is probably that we maybe don't see a continued improvement in that export trend into the month of May and possibly June. Why is that? Because of the lockdowns that we're all undergoing in Western economies at this point in time. So that we know is impacting trade data and probably will impact exports from China. The other data point from China that I thought worth mentioning this morning was looking at the Purchasing Managers Index, the Casson PMI for the services sector, and whilst the reading did come in below 50, a reading below 50 indicates contraction. It did show improvement from the lows of the past couple of months, so 2 to 3 months of improvement. That's a positive, showing that the service sector is in China starting to re-engage. And then just digging into it a little bit further, the confidence indicator that's looked at did show further improvement. So that maybe bodes well for further improvement in the coming months, something that we will continue to monitor. The other thing to discuss just this morning is the Bank of England. We had their interest rate decision and the accompanying reports and statements. No change to interest rates held at their lows of 0.1%. Interestingly, two members did vote for increasing the scale of the quantitative easing programme by some £100 billion. So there is a little bit of dissent there, and maybe something for us all to think about as some further support that clearly the Bank of England could provide going forward. Digging into the report itself, they've tried to give an indication of the impact on the economy. Looking at that, clearly it speaks to the very challenged environment that we find ourselves in today, with output in the first half of the year likely to decline some 30%. The charts, etc., that they have then show a rebound in activity into the second half and on into 2021. But as I've discussed in the past, there are many challenges with modelling economic scenarios at this point in time. So we'll just continue to watch how that evolves. That's it for today. Enjoy the long weekend with the bank holiday tomorrow, and I'll join you all again on Monday. Thank you very much.